Hi guys, as we have seen yesterday, weekly Bank Nifty analysis. Now let's look at Nifty 50 weekly analysis. We can see here the market is clearly bearish, breaking structures towards the downside. So let's look into details of how we could have taken our trades in Nifty. The indicators which I am using are the central pivot range by KGS and the FEMA, which consisting of five exponential moving averages, the 9, 21, 50, 100 and 200 moving average. The 9 is the gray color one, the 21 is the red color, the 50 is the orange color, the 100 is the green, as well as finally the blue color one is the 200 moving average. You can see I'm currently looking at 1 minute time frames. Before knowing more about pivots, I would like to recommend you to read a book called Pivot Boss, written by Frank Ochoa, which really explains to you how you need to trade pivots, which helps you a lot to take trades. You can see here, this is a wide pivot range when compared to this. On wide pivot range, you can expect the market to always move in a sideways way. And in a narrow pivot range, which is between this wide pivot range, you can always expect the market to be a trendy.
But let's break into the 1 minute time frames, guys. You can see here the market capped up on Monday, showing significant bullishness over here. You can see this kind of liquidity over here, guys. This is called as a trendline liquidity. This trendline liquidity, the market gapped up, retraced back, and broke structure towards the upside. Here you can see a clear break of structure towards the upside.
Here you can expect the market to be bullish, guys. But what happened as soon as the price reached the upper band of the pivot, they formed a bearish engulfing candle over here. This is a engulfing candle, guys. The market just gapped up because to target all those sellers who have entered the market here, 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 here. The people who might have entered the market here might have tried their stop loss till here, or the people who might have entered the market who has sold their positions over here might have placed their stop loss just above this pip or something like this. All those sellers, all those buyers, stop losses has been hit, and you can see this is a very good confluence that the market is bullish because this is a clear trend line liquidity. And the market broke structure towards the upside, but here it faced some kind of resistance and the market continued its downward position. As soon as this bearish engulfing candle formed, you could have easily entered the trade here, expecting the market to be bearish and keeping your stop loss just above this pip. You could have targeted this low or yesterday's close level, or you could have even targeted the retracement of this zone. So if you consider this retracement, you could have easily considered the 1.68 level over here, or you could have just tried your stop loss as long as it crosses the 21 moving average. Here it crossed the 21 moving average. So this is one setup, guys, which you could have easily taken, or you could have targeted the S1 level. Here you can see in Nifty, the price usually respects the S1 level. So it doesn't happen in Bank Nifty, but in Nifty, the price usually takes supports at the S1 level. So you could have easily targeted the S1 level, or you could have just tried your stop loss as long as it reached the S1 level. Here you can see some kind of bullishness, but it's followed by a bearish reversal candle. which is twice as bearishness as the bullish candle over here. But the market retraced high and it crossed the 100 moving average, and this momentum over here crossed all the moving averages, the 9, the 21, the 50, 100 and 200 moving average, which clearly signifies that the market is clearly bullish. But what we need to remember here is that the last up move before the down move, which broke structure towards the downside, is this, which broke structure towards the downside. This is the supply, guys. This is the last up move before the down move, which resulted in the break of structure towards the downside. Here you can see the retracement towards this 1 minute order block. You can see some kind of pullback here, and finally it reached here, and sudden rejection of price from this zone. Here, this accumulation of price which led to break of this structure, the price retraced back with hesitation and with pullbacks and faced some kind of rejection over here. Clearly, the market tells that here there is a lot of supply over here. So you could have entered short position after this rejection candle, expecting the market keeping a stop loss just above this bid and targeting the retracement level of this zone. So you could have just targeted this retracement level. So you could have easily targeted the 1.100% level or the 1.68 level. Or you could see you can actually target the midway between this zone, guys. Here there is the midway. Yeah. The midway between the 2.68 1 or 3.68 3.618 level, you could have targeted all the way till here, or you could have just tried your stop losses. So as long as it crossed the 21 moving average, here you can see a clear cross, price crossed the 21 moving average, you could have easily targeted till this level also. Anywhere there is a very good risk to reward ratio, guys. Here in trading such kind of days, you should always target your stop losses. As long as your risk confluence is between this pips, like only 27 points of stop loss, and your target is like way more than your risk, you could have definitely, based upon your risk appetite, you could have definitely taken your trade and tried your stop loss all the way along here. Or you can also see some kind of demand over here. Here you can see the 1 minute order block over here. This last swing which broke structure towards the upside. You can expect this demand over here. So after reaching this demand, a slight pullback from here, but it further continued selling as the market is clearly bearish, and you can see this accumulation over here. Here the price also accumulated over here. So this accumulation of price which broke structure towards the upside, you could have also targeted till here as well. And this is your target. So it's really good trade, guys. And what you can see here is that here it clearly broke structure towards the downside. It retraced back, and here the supply got consumed and it broke structure towards the downside. Here the same thing has happened, guys. Here you can see the clear break of structure towards the downside. The last up move before the down move, which broke structure towards the downside, is this hammer, guys. You can see when price reached this 1 minute order block, there is a lot of hesitation in market, guys. See, the market pushed and rejection of supply. Again, try to push rejection of supply. Again, the market reached the supply zone. Rejection over here. Again, price reach, and finally, the price reached the 1 minute order block, and suddenly after it reaches, it formed a rejection candle, an inverted hammer or something of some sort. Here you can see the bullish candle followed by a doji and followed by a equal size reversal candle. This is a clear classic sign that the market is bearish. You could have entered the market seeing this bullish candle and this rejection of price from this 1 minute order block. This is a clear order block because it has even fair value gap over here. The three candle structure, guys, and this fair value gap didn't get consumed over here, but here definitely it got consumed. You could have targeted entered after seeing this bearish engulfing candle, but here after this rejection only I definitely would have taken my trade and I would have targeted this low, or I would just trial my stop loss. I think this low, because of this demand over here, is what I would have targeted, or I would have tried my stop loss as long as uh, it doesn't cross the 21 moving average. This is another good setup, guys, for my trade. And here you can see the market was just moving sideways. After this, continued further selling. This is two setup, guys. Here you see one trade, here you can see another, and this is also another good trade, all towards the PE side. And the following day on Tuesday, this is as Sensex expiry day, the first Sensex expiry day. Mm, it has changed from Friday to Tuesday. You can see the market targeted all those sellers. Here there might be a lot of 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 sellers who tried to push the market down, who tried to push the market down in a single go. All these people who have entered the market here, all those stop losses has been hit, guys, with a very bullish candle and gapped up also. And you can see the price also gapped above the 200 moving average, signifying that the market is really bullish. But what happened is that because of this wide pivot range, you can expect the market to always be a sideways day. So you can see the market trading between this wide pivot range, but here you can see the market face some kind of rejection from the pivot and head towards lower. But here you can see clearly that the market is trading just between the pivot. So on a wide pivot range days, you can always expect the market to trade sideways. But let's break down this trade as well, guys. As the market gapped up, you can see the fib candle low, and you can see the 1 minute fib. This is the 50 level of the one minute candle zone. You can see the price retracing back towards the 9 moving average as well as the 21 moving average. Price taking some kind of support over here and trying to head towards higher, and which further led to this break of structure. You can see a clear trendline liquidity over here, guys. This is a clear trendline liquidity. But what we need to look here is that here we can expect the market to be bullish only, guys, because as the market gapped up and price retraced back towards the 9 moving average and some kind of bullish momentum you could have definitely see over here. But what happened here is that if the market is actually very bullish, the market would have gapped up here, took support from the 50 of the first candle or the 9 moving average or the 21 moving average, and after retracing back, the market would have head higher Again, it could have come here and further continue towards the upside. But what happened here is that even if it broke this high, showing the clear significance of bullishness, you can see a clear sign of liquidity over here, that the market is not very bullish, just it's trying to move up with a lot of hesitation. But here there was a lot of supply over here. Because of this supply, I guess the market just broke the structure and followed by a bearish engulfing candle here, guys. Here you can see it's almost a bearish engulfing candle. Looking at this candle as well as this hesitation in market to move towards the upside, you could have definitely taken your short position right before this bearish engulfing candle, expecting the market to go lower. You could have just tried your stop loss till here, and here you can see a clear trend line liquidity. You can see this is a clear trend line liquidity, guys. This zone over here shows a clear sign of trend line liquidity, and it broke structure, took support from yesterday's close, I guess. This is yesterday's close. It came all the way to yesterday's close, took support here and head higher, breaking this structure, resulting in formation of chalk. This chalk, or you could have just tried till here, guys. I think this is really a good trade, as this is also on Sensex expiry. You would have easily doubled your premium. There is another thing which adds to our confluence is the VWAP level. I'm using anchor VWAP. Here you can see clearly that the price could have taken support from this anchor VWAP from here, and it could have hit higher. Here you can see after this, the break of structure, price could have took support from this VWAP level and head higher. But what actually happened is that it clearly broke structure towards the downside, followed by another bullish candle towards the upside. But here, this dodgy candle formed and it further led to break of structure towards the downside. Seeing this VWAP level getting broken down, you could have even further entered over here as well. Looking at this candle, you could have entered your position here, expecting the market to go lower. This is also another good setup, guys, for better confluence. And here you can see after this supply, this 1 minute order block and price rejecting from this 1 minute order block, the market broke this structure, resulting in formation of chalk and this retracement towards the upside. You can see clearly that this retracement towards the upside and followed by another bearish engulfing candle which couldn't cross the VWAP zone here, the VWAP level. Here is another better confluence for you to take short position over here. So for better confluence, if the people who might not have entered here could have entered your position here as well, keeping your stop loss just above this pip, and you could have targeted this low. This is another confluence, guys. Here you can see this is one confluence, and here breaking this wave up towards the downside, you could have got another confluence. Confluences helps you to hold on to your trade, guys, which is very useful. Here, let's take this out. This was yesterday's VWAP level. And coming here, you can see this liquidity, this bearish engulfing candle, broke structure towards upside. This sideways consolidation from one. Uh, After this breakdown, consolidated in a pattern like this swing kind of pattern and further led to break of structure towards the downside, followed by a bullish reversal towards the upside. In all days like this, we should always be careful because a wide pivot range always leads to sideways days, guys. And here you can see that the market went higher from here. This swing which broke this structure, you can see the price taking multiple support levels at this zone. This is 0.38 level. 0.5 and 0.6 level is very important. But if the market is very bullish, sometimes it takes support at 0.38 level. And you can see there are multiple support over here. And what we can see is that after this bullish candle, the price swept this high and it broke this low, swing low. And this is a clear chalk formation. And the last up move before the down move, which broke structure towards the upside, was this 1 minute order block over here. So you can see when the price reaches the 1 minute order block, it reached in a pattern like it head towards high, pullback, high, pullback, and it reached here and further rejection of price as soon as it touched the 1 minute order block. As soon as it touched this 1 minute order block, you could have taken your short position over here, seeing this rejection, keeping your stop loss just above this pip, and you could have targeted the 1.68 level or this swing low or this swing low or this swing low as well. So you can also target this. Price came exactly to this low only. This is another good setup, guys. You can see it's with the liquidity present above these equal highs, or you can consider this high as well. So between these highs, it swept and broke structure. You can also tell that here also it didn't sweep the liquidity, guys. You can see here clearly that the market didn't sweep this high and it broke, even though it broke structure. And if you have marked the 1 minute order block again, it swept liquidity and it broke structure over here. You could have considered this supply also over here. This is a 1 minute order block. And you could have even entered your position here as well. You could have definitely gained some kind of profit. And which further led to break of this structure, guys. This break of structure. And the last supply which broke structure towards the downside was this 1 minute order block. You can see clearly that the market swept this high and followed by bearish engulfing candle over here. This is another bearish engulfing candle after sweeping this high. So you could clearly see in that the market engulfed this candle and you could have taken your short position keeping your stop loss just above this pip and target this low, or you could have targeted, you could have just tried your stop loss till this zone, guys. A very good trade setup, guys. This is an awesome trade. You could have easily doubled your capital if you have traded this on Sensex. See this smart money concept, which if you have applied it correctly, will yield you a very good profit, guys. See clearly the market took support from this 200 moving average. It head higher, but here as soon as it broke structure towards the upside, an equal size bearish candle here forming a bearish engulfing candle, further continued the price towards the downside. You can clearly see that here you could have taken this trade, and this trade. There was three good setups, guys, for you to take trades on that day. And here you can see after that the price couldn't cross this zone, and if you consider this, the price reached just the 550 level and it retraced back 550 of this zone, and followed by Wednesday. You can clearly see that the market is with pivot range is very narrow. This is too narrow when compared to the first day here on Monday. And on these days, you can clearly expect the market to be very trendy day. So if the market gapped up, and here if the market would have targeted those sellers, the market would have gapped up, took support from this zone or any moving average and would have hit higher. But as the market sentiment is bearish, you can clearly see, to try to plot the pivot level here, you can see the market is clearly bearish only. And another trade setup, if you have seen the pivot over here, you can see after this breakdown of this candle over here, guys, this clear break of structure, or you can call it as chalk, and you can see that the market couldn't cross the 550 level over here as well. This is the 550. The last bullish candle looks like a last sell-off candle, and you can see that the price here couldn't cross this VWAP level and rejection of price from here. After this bullish candle and seeing this rejection and the 550 level, you can just could have kept your stop loss just above this pip and you could have targeted this low. This is another good setup, guys, for anyone who could have taken the trade looking at the looking at the VWAP level. And here you can see the market broke structure towards the downside. As it is a narrow pivot range, you can clearly expect the market to be bearish. And on this day, if you try to put place the pivot, you can see on the first day the price took support at the S1 level. Here also you can see on a trendy day the price took support from S1 level, and there was some kind of pullback over here. But what actually we need to trade is that you can see the market gapped up and followed by a rejection candle towards the downside, targeting all those sellers who might have sold here. The people who might have sold their positions over here, they might have placed their stop loss here, somewhere in between this. In a single go, all those sellers who might have sold here, the market has targeted all those sellers and continued further down, because these stop losses are a form of liquidity for the market. So you can see after this bearish breakdown of the candle, which broke all the structures towards the downside, the 9, the 9, the 21, the 50, 100, and 200 moving average. And here you can see a clear trend line liquidity, guys. This is very important because you can see after this bearish candle formation, these two bullish candles, blue candles showing bullishness. But what happened here is that the price couldn't cross the VWAP level. the 9 moving average as well as the 21 moving average is showing that the market is clearly bearish. If the market would sentiment is bullish, the market would have gapped here and could have clearly crossed here. But what happened is that this dodgy candle is showing that the market is bearish. Looking at this dodgy candle or followed by this reversal bearish candle, you could have entered your position, keeping your stop loss just below this pip and targeting the S1 level. Or in my case, I would have definitely traded here, looking at this dodgy candle rejecting price from the VWAP, keeping my stop loss just above the VWAP zone and targeting this S1 level. You can see a clear sign that the market is clearly bearish, but here you can see the market broke structure towards the upside here, initiating a lot of buyers over here. This is a clear chalk, and the market, this is a clear demand zone over here. But what happened is that the market would, after this bullish candle, followed by a equal size bearish candle, which broke this structure towards the downside, telling that the market sentiment is bearish. This is a 1 minute order block. But here, when the price retraced back towards the 1 minute order block, we should always expect that after this bullish candle coming here, retracing back again, coming here, and touching the 1 minute order block, guys. But here, what happened is that this liquidity is really good. See this pullback, which taking support from the 9 as well as 21 moving average and heading higher. But if the market sentiment is bullish, the market would have continued higher, guys. But here, as the market sentiment is very bearish, with this bullishness, a lot of buyers might have entered the market. But as soon as after this candle followed by the smart money people, the smart money initiated selling position, which further led to break of the structure towards the downside, telling that the market sentiment is bearish, and it didn't even cross the 21 moving, the 200 moving average as well. And you can see the market is moving sideways here. But what you can see here is that this bullish candle over here, this trendline liquidity, this liquidity which further led to break of this structure towards the downside, you can clearly plot it as, and this supply which broke structure towards the downside is the 1 minute order block. Here the sentiment is that after this bullish momentum followed by bearish reversal, and there is a lot of hesitation in market trying to move further. But here, after this pullback, the market clearly broke structure with a strong bearish candles, which broke structure towards this downside. You can plot this as 1 minute order block. The price again retraced here. Again, it broke structure towards the downside. And you can see after this candle, which broke structure VWAP level, as well as the 9, as well as 21 moving average, you could have easily initiated your selling position here, expecting the market to go lower, or could have targeted this low or this low, this low, or trying to draw the favorite retracement level from here to here. You can target the 1.68 level, or the 2.6 level, or the 3.68 level. You can see here also easily the market get towards here. You can see clearly that as long as the market didn't cross the 21 moving average, the market sentiment is clearly bearish, or you can see clearly that the price even continued further till this zone as well. And after seeing this bearishness, you can clearly see that the market broke structure towards the downside. And the last up move before the down move, which broke structure towards the downside, is this supply over here. This is 1 minute order block. And you can see a lot of hesitation in market trying to move towards this zone. This is kind of a rounding top saying that the market is clearly bearish, but this supply got consumed over here, and there was sell off here. There's another rounding top again. It head lower again. Finally, as soon as it reached the 1 minute order block, you can clearly see you could have just taken your position after this bullish candle, followed by an equal size bearish candle over here. You could have easily taken your position over here, expecting or targeting this low. Or if you try to draw fib retracement levels, the common point between this and this, since it is all blue, let's keep about this below this zone. Okay, could have easily targeted the 100 level or the 1.68 level, but you can sometimes the midway between the 1.6 or this one or the 100% level. It's a very good risk to reward ratio. And you can see clearly this is one good setup. Here you got another good setup. Here you got another good setup. And from here the market retraced upwards. You can see here this kind of hesitation in market. You can clearly plot some kind of trendline liquidity over here. You can clearly see some sort of trendline liquidity. Price forming multiple resistance level over here. But what happened here is that you can place the anchor VWAP over here. You can see after this supply, which this low has been swept, there was some kind of bullishness. You can see the hammer pattern over here. Here you can see another hammer pattern. And you can see the clear chalk formation over here. The last up move. This is a clear chalk. And if you try to draw the fib level between these zones, or if you try to draw here as well, or you can clearly see that this structure, which again led to further break of structure, this is an order block, and the last down move before the up move is this candle over here. This is another 1 minute order block. And you can see clearly, guys, after this bullishness and further retracement towards here, followed by price taking support from this anchor VWAP level and resulting in breakout structure. This is a clear 1 minute order block. Again, the price retraced back to this 1 minute order block, and this bullish candle which broke the VWAP, the 100, the 50, the 21, and the 100 moving average towards upside. After this bullish candle, you could have easily taken your long position over here, keeping your stop loss just below this pip. and targeted higher, guys. You could have targeted this swing high over here, swing high, or this swing high, or you could have even targeted this swing high as well. But if you draw the fib extension levels over here, common point between this, and this, you can clearly see here it reached the 4.18 level, 4.26 level, 4.26 level. For better confluence, you can also trade here as well. So you can see this structure also got broken towards the upside. You can see clearly that this structure has broken towards the upside. This is another break of structure. And this demand which broke structure towards the upside, you could have easily drawn fib level from here. You can clearly see that the price taking support from 0.38 level as well as the 200 moving average. The blue color line over here, you can see clearly that 200 moving average support also is being taken. You could just enter your trade here also, keeping your stop loss just below this fib, and when drawing fib extension levels, drawing the fib extension levels, common point between this. You can target the 1.618 level or the midway between the 2.618 or 1.618. So if you see the midway, told you guys, the midway between this zone, or you could have easily targeted the pivot level, guys. You could have just tried your stop losses here. So this is what it means to add on to your position, guys. Excuse me. One good entry over here, another good entry over here. This is what a good trade looks like. Adding to your winning positions and keep cutting your stop losses to very short levels. I always recommend you to always trade based upon risk to reward ratio. Don't blindly take your trades expecting the market to be in your favor, guys. I think that sort of mentality doesn't last for long. Always trade based on risk to reward ratios. Here you can see clearly that this amount of risk to gain this amount of capital, guys. And coming to Thursday, Thursday is Nifty expiry day. Here also the market sentiment is clearly bearish only, guys, because the market gap down than yesterday's bullish momentum. You can see a good reversal from here. And looking at this reversal, a lot of buyers might have entered the market expecting the market to head higher. Even you can clearly see this kind of liquidity, which usually gets wiped out. The market might have gapped up here, gapped up, took support from some sort here, or like continue higher only. But what happened is that the market gapped down, guys. And price, if you try to draw the swing structure over here, you can see this is the golden ratio, the 50 level. You can see that the price came over here, took multiple rejections over here, You try to break down this trade, you can see that the market gap down, took support from this zone. A lot of buyers might have entered the market here. You can see a clear demand over here, large down move before it broke structure towards the upside. So before it broke structure, 1 minute order block, and the price again further reached this zone, and you could have easily targeted a quick scalp position looking at this rejection of price after it reached the 1 minute order block, and looking at this doji as well. You could have just placed your stop loss here, targeting this high. This is a quick scalp, guys. Or if there was any good sort of retracement, you could have add on to your position, expecting the market to go further higher. Or if the market broke this structure, took support from here and head higher, you could have re-entered your position. But what actually happened is that here you can see this bullish candle followed by an equal size bearish candle, and further it swept this low and it couldn't break this high. You can see this high as well as this low. It just swept this low but couldn't break this high, forming a clear chalk here. This is a clear chalk. This supply over here. This is the last up. This is the 1 minute order block, guys. The last. This is the 1 minute order block. And if you try to plot the VWAP level of yesterday's, you can clearly see after this chalk formation, the price impulsive candles broke towards the downside. You can see a lot of hesitation in market trying to move further high. See the common point between this and the common point between this. You can see the 550 level here, 550, the 550 level. There is a rejection of price over here. But as soon as the price couldn't cross the 550 level, it broke structure towards the downside, breaking all moving averages. And the price took support from here, guys. But after the price took support from the VWAP level, it head higher. But here it faced resistance over here. So we could have easily seen that the market clearly is bearish. You could have easily targeted the fib extinction levels, the common point between this, the common point between this, and targeting the 1.681 level or the 2 point. Here you can see clearly the market came all the way to 2.618 level. The 2.618 level. Here you can see the confluence, guys. I have showed you 3 trade setups, guys. Here they price the 2 up candles which couldn't break the structure towards the upside after this impulsive move towards the downside, and the 2 candles over here, guys, after this bullish candle over here, bullish engulfing candle, 2 downward candles, guys. This is the trendline liquidity over here, and which further led to break of structure towards the upside, and another 2 bearish candles which couldn't formed here. Here you can see these 2 candles which couldn't cross and found some kind of rejection over here, which led to further break of structure towards the downside. This confluence and this confluence over here and another confluence over here, you can see clearly that the same pattern gets repeated over and over again. And you can see a clear bearishness over here. And you can see the market retraced up, initiating a lot of buyers coming to the market. But what happened actually is that the price after this breakout of this candle, this is a sudden unexpected move only, guys. But what we can see here also is that when you look clearly into this trade as well, you can see this is a trend line liquidity, guys, and the blue candle, the black, the blue, the black, and the blue. You can see multiple candles forming over here, consolidating price and price getting support from this 9 moving as well as 21 moving average. You could have easily entered the trade expecting or targeting this high, keeping your stop loss just below this low as well. I think this is not easy, guys, but through a lot of practice, this will actually get developed. Here, while plotting the anchor VWAP level, guys, you can see clearly that this bearish breakdown of the candle is followed by the bullish candle. And here another bearish candle which broke towards the downside followed by another bullish candle. You can see here that multiple bullish candles, bullish engulfing candles formed here, expecting that the market is clearly bullish from here. On this consolidation of price, you could have easily taken your trade, expected the market to go further higher. And you can see further here that the price couldn't cross the 9 moving average, which further broke the structure towards the downside. All those buyers who might have entered the market here, all those stop losses has been hit. And you can see multiple rejections from this zone, guys, showing that the market sentiment is clearly bearish. And while breaking down on this trade, you can see here after this bullish candle, the market didn't move further higher. You can see this zone over here which broke structure. This is a 1 minute order block, and you can see this demand over here. Even this demand was this bullish candle is just a manipulation, guys. You can see after this bullish candle, the price retraced, but it couldn't cross the VWAP level here as well. So there is no clear sign of demand as well here. You could have easily, after this rejection, you could have traded short position over here. You can see another clear sign of liquidity over here. This is a clear trend line liquidity, guys. I think it's very difficult to identify this kind of liquidity. But after this breakdown of this candle and after this bullish candle followed by this bearish candle, uh, bearish piercing candle, you could have entered your short position, keeping your stop loss just above this pay. And a lot of confluences also are there, guys. Here you could target this low. A lot of confluence also there. You can see price getting rejected from VWAP. There is 200 moving average after this bullish candle followed by bearish engulfing candle, equal size bearish candle. and this kind of liquidity and this bullish candle followed by piercing candle, you can clearly see that the market is clearly say that the market is clearly bearish, and you can see the market head lower, or you could have just tried your stop loss still here after looking this bullish candle. And if you try to plot anchor VWAP over here, which led to break of structure towards the upside, you can see that the market after this breakdown of this candle followed by another bullish candle, breakdown of this candle followed by an equal size bullish engulfing candle, breakdown of this candle followed by another bullish candle. You could have easily taken your position over here after this candle, keeping your stop loss just below this pip, below the VWAP, and could have targeted this high, this liquidity over here, this high here. As this is on Thursday, this is uh, a quick scalp, guys, where your premium could have easily doubled because it's around 518. 1518 means it's around like 318. So this is just a few scalps, guys, because during expiry days, usually the market is very fractal, and the market always moves in a sideways, targeting both buyers as well as sellers. Or this usually the option sellers, due to expiry, they might be profitable on this kind of day. And coming to finally on Friday, guys. On Friday, you can see that the market pivot levels is of equal size, but it is downwards and telling that the market is bearish. But what happened here is that if you try to take this wave out, here you can see clearly that the market gapped up, guys. Price took support from the 9 moving average and tried to head higher. But here you can see clearly that the price couldn't cross the upper band of the pivot levels. Here also you can see clearly on this day it couldn't cross the upper band, guys. Here you can see the upper band. The same thing happened here on Friday as well. The price couldn't cross the upper band over here, and this bullish candle signifies the large sell-off candle. If you try to plot your VWAP zones over here, after this bullish engulfing candle, followed by the price couldn't cross this upper band, and the price retraced back, and this bearish engulfing candle, guys, which broke structure towards the downside, this low, as well as it broke the VWAP. Breaking down VWAP towards the downside is very crucial, guys. So it signifies that the market sentiment is bearish. Keeping your stop loss just below this and targeting to yesterday's low or yesterday's closes has been taken, so it's better to target yesterday's low. Or you could have drawn the Fib retracement levels from here. Here clearly you can see if you draw the Fib rate, it clearly shows 4.681 level, the 4.26 level. Or you could have targeted the S1 level as well. Or you could and you can see after this bullish momentum, the price couldn't cross the 21 moving average, keeping your stop loss just above this. As the price couldn't cross the 21 moving average, you could have again further targeted here. And if you draw this retracement level from here to here, you could have targeted the 2.618 level or the 1.618. Or after here, this breakdown of this candle, you could have easily exited, or you could have targeted the midway between this zone as well. When the market sentiment is bearish, always try to sell. Don't always try to buy, guys. And here, when you place your anchor VWAP here, you can see clearly that this is a bullish engulfing candle, clearly signifies that the sell-off has been over and now the buyers has entered the market. This is engulfing candle, which further led to break of this structure towards the upside. This is one sort of chalk, and here also you can see it broke this structure as well. And you can see clearly that as soon as it broke, the price took support from this 550 level. Here you can see the price took support at 550 level, further led to break of structure towards the upside. And if you consider this whole swing from here to here, you can consider another 550 level over here. You can consider this 550 level, which further led to this break of structure and this retracement. You can see when it reached this zone, there was slight kind of pullback and it reached this zone. As soon as it reached this zone, there was some sort of momentum, followed by the bearishness to take out all those sellers who might have entered here. And looking at this, another bullish engulfing candle. Here you can see this is another bullish engulfing candle. Bullish engulfing candle. Here you can see another, here is another bullish engulfing candle. You can see after this breakdown of this VWAP, you can see one bullish engulfing candle. And as soon as this broke structure towards the downside, another bullish engulfing candle, which further led to break of VWAP toward the downside, followed by another bullish engulfing candle. You could have easily taken your trade here when it reached the 550 level, targeting this high, keeping your stop loss just below this 550 level. Or you could further enter the market here after this bullish engulfing candle, keeping your stop loss just below this candle and targeting this high or even this high. Or if you try to draw the fib extinction levels from this swing to this swing to here, you could target the 1.618 level, or you could target the pivot levels. I think it's better here. You could have targeted here, or a target, you could have targeted all the way till here. Or looking at this fair value gap over here, you could have easily taken over here as well. You can see a clear fair value gap over here. So it's better that you could have taken your position still here. And after this bullish engulfing candle over here, the price broke structure towards the upside. But what followed further is that after sweeping this high, the market clearly broke structure, break of structure. This is just a sweep as the market broke this low, forming chalk here. And you can see if you try to draw the 550 level here, you can see the 550 over here. You can see that the market kind of trying to take support from these VWAP levels and trying to head higher, but it couldn't cross this 550 level. Again, it came down, trading between these zones. If you try to plot this zone over here, This is the last down move before the up move. If you consider from here, this is the last down move. And on such days, now we can expect the market to be a sideways trade as the market is trading between these ranges. But what actually happened here is that after this bullish candle formed here, followed by a bearish engulfing candle here, which clearly broke structure towards the downside here. This is a clear break of structure towards the downside. And if you try to mark this supply zone over here, you can clearly see that the price taking multiple supports here between this zone, This is also a 50 level. But what happened actually is that it led to further break of structure here, or this structure over here. This is another break of structure towards the downside. And it further led to this break of structure further down over here. If you try to plot the Fib extension levels from here, I think it does it both. And I have told you guys this retracement over here. Look at this retracement. As the price couldn't cross here, this sort of consolidation in price, as the market couldn't cross this level, clearly signifies that the market is clearly bearish. Seeing this breakdown and seeing this bearish engulfing candle, you could have easily entered your short position here, keeping your stop loss just above this pip or this high and targeting or trailing your stop loss as long as it crosses the 21 moving average. I think here it's a better trade, guys. Here, this kind of consolidation I have showed you here as well. So here you can see this sort of consolidation. This is another form of trendline liquidity. This consolidation, the 9 as well as 21 moving average, as well as this VWAP level. Here you can see rejection of price from this supply. Here you can see demand over here. You can see here also some sort of demand over here as the price taking support from the 9 as well as 21 as well as the 200 moving average. And I have showed you multiple examples of such sort. Like here you can see I have told you earlier. And you can see here as well the same kind of supply rejection of price. I think through practice you will definitely be able to get what I'm saying, but a lot of practice is required, guys. I hope my learning content will be helpful for you, and I would be regularly posting live trades from tomorrow. Thank you, guys.